All right, good morning, trade pros. Welcome to the morning market update for Friday, April the 18th. It's not Friday, joke, but it is like a Friday because it is Thursday and the markets are closed tomorrow. All right, so just a heads up, it's Good Friday tomorrow. All stock markets and futures are going to be shutting down. They're going to be closed, and they're closed all day, so there's really no trade opportunity. Yeah, you could do currencies maybe, and there's going to be very low volume. A lot of people take this holiday off and plan vacations around it and spend it with their family. So tomorrow, the day trading room is closed. Tomorrow, I might pop in and do a YouTube update with you guys to talk about something cool. I'm going to ask you if you want us to see a YouTube update tomorrow. What topic do you want me to cover? I might just come on live and say a few things to you and introduce you to my wife while I'm at home for once. All right. That's tomorrow, and then Saturday, Sunday, it's Easter weekend. So happy Easter to you and your beautiful families. Appreciate you guys. I love you all, and I hope you have an awesome time this weekend. Nice, peaceful, restful, relaxing time, so we get recharged and ready to get back at it on Monday. All right. Today, another thing. Today, there's a lot of news. There's going to be a really big morning market update. So stick with me, be patient, and let's go. Let's do this. Robert Mueller's releasing his report, or his report rather, is being released today. It's 400 pages long. I'm going to read every page twice. I'm kidding. I probably won't make it through the report, but it's coming out right before a 3-day long weekend, and I find that that makes sense, allowing people some time to digest it before there's any reaction. Attorney General William Barr has already said there isn't enough evidence to form any collusion or obstruction of justice, so no charges were pressed. And so, I'm pretty sure the media is going to sift through it, and both sides of the tale. The story always has two sides. Are going to pick points that look like either yes, he colluded, or no, he didn't, and put their own emphasis on it. I encourage you that before you believe something like that and take it as your own opinion, you read the report directly. All right. I don't know what's in that report, and I can tell you this: assuming an opinion of somebody without your own logical review is very dangerous, because an opinion also creates an identity. And assuming identity is one of the highest, most powerful things you could do for change. And sometimes we unconsciously do it by an accident, but it's the wrong identity that we don't want. All right. So be careful. I just wanted to say a few things about that. The report's coming out today, and there can be some volatility around this event. All right. Overnight, a set of really bad data, 3:30 in the morning Eastern time, German April preliminary PMI manufacturing came out at 44.5 versus 45 expected. That's the fourth month of straight contraction. All right. And that's not good. So that's what spooked markets and contributed to the downside a little bit more. And then at 4 a.m., the Eurozone preliminary PMI manufacturing came out at 47.8 versus 48 expected. Small miss, but again, it's a miss, and the third consecutive month it's done that in a row. So those two data points put some downside weakness into markets through the European session. All right. Seeing a little bit of a rebound this morning on some really positive news. I'll talk to you about that towards the end. Pinterest is going public today. They're doing their IPO under the symbol PINS, PINS. It will change, or it will trade on the New York Stock Exchange. All right. And it's valued at $19 per share, giving it a valuation of $12.7 billion. I feel like this price point is lower as a perception. I mean, people see share price and they value a company based on it. And it's an incorrect way to do things. And at the end of the day, investor psychology is human psychology. We value a lot based on price. All right. And so when you say, Pinterest is trading at $19 and then Lyft is trading at $80, not anymore, but it was. All right. You say, well, is Lyft more valuable? And it's a combination of the share price times the number of shares outstanding that creates market capitalization. So a low share price doesn't necessarily mean it's a low value company. And under Pinterest, they've approached the market at a lower valuation, and I think that's a great idea, because we'll talk about Lyft in a moment. And I still think that as an IPO, be very careful buying IPOs. They stand for it's probably overpriced. That's my joke and interpretation of it. It actually stands for initial public offering. After an IPO, the first day you'll usually have a nice jump, and then it sells off and fades until it finds a real demand below. All right, because institutional money doesn't like to jump in right after an IPO in the secondary market. Institutional money is already long pre-IPO, and they got a share of the allocation. All right. And guess who's selling it to retail traders buying the top? Institutions that got long before that made guaranteed profit. They're lightening the load. And that's why that's, from a psychology standpoint, the last thing you want to do is buy an IPO. All right. But you decide what's best for you. If you really love Pinterest, go for it. Another company that's coming out that I'm super excited for the IPO is the company we do our webinars on, Zoom. All right. Zoom is going IPO today under the symbol ZM, and it will trade on NASDAQ, and its IPO price is at $36 per share. Big difference between Zoom and Pinterest is this. Pinterest shows the images and hasn't made a profit ever. All right. Their net loss in 2016 was 200 million. In 2017 it was 120 million negative, and in 2018 it's 60 million. So Pinterest is still building scale. It's this new model of doing technology business. Doesn't matter about revenue. Let's build users, and then the revenue will come. I wouldn't invest in a company like that, and I haven't. And so Pinterest is following that strategy. Their negative losses are improving, so it's kind of on an upwards trend. But if you do the math, all right, there is about $400 billion lost of this company before it's even gone IPO. So how do you lose $400 billion if you're not making any revenue? Shareholders, investors, they put their money into the company hoping it goes public, and that's their liquidation event or their exit strategy. All right. Whereas Zoom actually has revenue. In 2016, they made 200 million, 2017, 400 million, and in 2018, 700 million. And they actually turned a profit. They are positive on that side. All right. Sorry, those numbers are off. 2017, they were close to zero. 2018, 160 million. 2019, 380 million. That's Zoom. The other ones were Pinterest, that were revenue, but their expenses were higher, leading to the loss. All right, two big companies coming out with an IPO today. Very interesting to watch them. I'm going to keep an eye out on the symbols, see how they're accepted, and what the initial reaction of the secondary market is to those companies. So you needed to know that. Now you're up to speed. Speaking of IPOs, the biggest IPO of this year is Lyft. Continues to drop. It's now down 22% from its IPO price. It's probably overpriced, so it got devalued. And down 37% from the opening day high of 88.60. Worst performance over that time period of a US-based company who raises over $1 billion in its IPO since Facebook's 2012 debut. All right. But here's the thing. Facebook was down 32% in just 2 weeks after its IPO. And now it's up over 1,000% in the next 6.5 years. So, it's not like this thing IPOs and you have to have it or you don't. That rush mentality to get in is what causes this big spike on the first day and then a massive drop. So people say, well, there's time. I don't need to buy it on the first day. So if you like any of these companies like Zoom or Pinterest, all right, then what you do is you wait it out and you see some demand come in first. All right, that's just my take on it. In today's markets, Japan's down 0.8% or 0.8%, 0.8%. Hong Kong's down 0.5%. China's down 0.4%. India's down 0.3%. In Europe at midday, London's down 0.2%. Paris is up 0.2%. Frankfurt's up 0.4%. Futures in the United States were down, now sharply reversing those losses after we printed some really good economic data. All right, particularly one report, and that report was initial jobless claims. They came out at 192,000 jobs filed, or 192,000 filed for unemployment claims, insurance. That's sort of the initial jobless claim report. The higher number is actually worse. One of those reports where lower is better. Came out at 192,000 versus 205,000 expected. So very positive number, and the lowest reading since December of 1969. All right, so the job market shows that it's roaring, shows people are not filing for unemployment. When people don't file for unemployment, they make money, they're employed, and when they're employed, they get to pay their bills and help other businesses stimulate, and they purchase things, creates business, revenue, that becomes income, that gets paid out to shareholders. Shareholders then invest in more people. It's just a whole loop that feeds itself, and this is good. This is a really good report. As soon as this came out, the market ripped a little bit higher. All right, Philadelphia Fed business outlook came out as well at 8:30 in the morning. It missed pretty big as a total, 8.5 versus 11 expected. New orders were up. Inventories were the ones that were the lowest. And employment was up 14.7 versus 9.6 on this index. And the most important part, the future 6-month business condition index, or pretty much the outlook for the next 6 months of business, was 19.1 versus 21.8 prior, so a little bit lower there. All right. Retail sales in the United States, this was another strong data point this morning, up 1.6% versus 1.0 expected. If you remove the auto sales, because auto sales are volatile, all right, a car is one of those bigger purchases you make in your life and less often, and so it creates volatility based on seasonality. If you strip away the auto sales of the retail sales, you're still up 1.2% versus 0.7. So it's a beat no matter how you slice and dice this thing. The prior month over month minus autos was revised higher from negative 0.4 to negative 0.2. So back month revision puts even more positive light on this release. And prior retail sales with the autos were revised a little bit lower. All right, so it's auto sales that hurt this report essentially. 9:45, we have PMI composite flash report, 10 a.m. business inventories and leading indicators, 10:30 natural gas inventory, and at 4:30, the Fed money supply and the new balance sheet update. All right, so and that rounds out the week. We're going to be done trading as of 4 p.m. today. All right, that's what we're up against. Negative data in the European session, really positive data to start the US session. And looking at this market, if we could manage to get back above 29.12 on the S&P 500, it's going to be a bullish thing. So far, this run up from 89.5 to 9.25 is on really weak volume pre-opening bell. And so we're going to see the first 5 to 10 minutes. It's today's session, whatever you're trading, give it 5 to 10 minutes to see how the dust settles. We have really sharp sell-off overnight, and it was on pretty decent volume. And then the rebound is on pretty weak volume, telling you there isn't that much money that got into this position. And if there isn't that much money that got into the position, the question is, will they? And if they don't, maybe we're headed lower. So today, especially because it's the last day of the week, it's a reduced week. There's going to be less volatility, less volume. Be more patient at the start. You don't have to be in the trade as soon as the market opens. All right. In fact, what makes you a trader is not being in a trade. You're a trader when you're patient, and you're not in a trade when you shouldn't be, and you wait for the right opportunity. That's how you become a successful trader. All right. That's the truth. Being in a trade doesn't make you a trader. All right. And not being in a trade doesn't make you not being a trader either. How's that for confusion? Basically, what I'm saying is be patient. Follow the 3 rules to start the session. That's the only thing I ask of you is, number 1, trade less size. Number 2, trade less frequency. All right. And number 3, take profit quicker. Get paid. It's the last day. It's a reduced volatility week. And I can tell you a lot of traders are already taking off for the weekend. And so we're going to get less volume, kind of potentially more consolidation. So start out looking for less, and if the market starts moving, there's nothing wrong with scaling up and letting your profits run. I mean, that's what you're supposed to do. All right, start slow and shift gears higher with the market. What we're doing as traders is trading the market. We're not creating an expectation in our head and hoping it happens on the market. We dial back anything we expect to 0, and then we see what's happening and take advantage of it. And that's the crystal clear vision you need. That's all I got for you. I want to say happy Easter to you and your family. Really love you guys. Thank you for being part of our community. I get super excited every morning to do this update, and you're the strength that I need to get through some of these crazy long days on 90% of the days, these days especially. I appreciate it. Have a good weekend. Enjoy the Easter feaster. Get some turkey in you. Get some good sleep. And Monday, we get rolling with another week. I think there's going to be some volatility to end out April. Take care. Have a great day and an awesome weekend. I'll see you later. Goodbye. And if you want to do an update tomorrow, tell me what you want me to talk about, and I give you guys some pointers on whatever it is that's a recurring theme in the comment section. Love you guys. Hit the like, subscribe, and we'll see you soon. Goodbye. All right, trade pros in the room. Let's plan out some trades here, because even though I expect a sluggish start on the S&P 500, I do expect to see some volatility come in at some point. There's 2 levels I'm mainly looking at, and around those 2 levels, they'll start to cause some price action movement and volatility. All right. We're at a very interesting place. We sold off quite a bit yesterday. We rebounded this morning off some news, and I think that news rebound is going to be tested. So here's a level I'm going to give you to start the day, and we're going to watch it like a hawk.